Hi, welcome today for another video on accounting. Today we want to talk about the fundamental accounting system and equation. And the reason that this is very important is because if we don't understand the relationship here, we may not understand the relationship anywhere in accounting. The fundamental accounting equation is assets equals to liabilities plus owner's equity. In other words, what I got, which are assets, equals how I got it, which is liabilities and owner's equity. Either I borrowed the money, in other words, I owe somebody, or I put in my investment to get these assets, the things that I own. So again, assets are things that I own. They could include, for most businesses, cash, accounts receivable. Now, what is an accounts receivable? That is where you made a sale to someone and on credit, and they still owe you money. So they have a promise to pay you money at some point in the future. Other assets, land, buildings, equipment, office supplies, inventory, the list goes on and on and on and on. So again, assets are things that I own. Liabilities are amounts owed to others. Accounts payable is one of the big ones. So what is an accounts payable? That is an amount owed to another business. Example, you are renting your building. That rent is paid on a monthly basis. That is an amount owed to another business, so hence an accounts payable to that business. A note payable is where you sign like an IOU that you will pay a person over time. You could also have bonds payable, for example, which are paid over many years. And of course, our favorite, taxes payable. And the last thing is my investment. Now, my investment for corporations and proprietorships is going to be a little bit different in terms of the names of the accounts. For a corporation, we're going to look at common stock. And that's basically a piece of paper that says you invested some money into the business, and this is how much you own. And of course, you can sell that to other people. Retained earnings are the earnings that have been left in the business over time. So say the first year you made $100, you gave the stockholders $20, then what is retained in the business or left in the business is $80. We'll look at that in more detail at a later date. For proprietorship, partnership, it's the name of the individual, comma, capital. So like J-Doe, comma, capital. So let's look at this again briefly. What are we talking about today? The fundamental accounting equation. What equation is that? It's that assets must equal, again, must equal liabilities plus owner's equity. In other words, what I got in the business must equal to how I got it. What I got are the things that I own, commonly called assets, like cash, accounts receivable, land, buildings, equipment, and office supplies. How I got it was either I borrowed money from others, something payable, accounts payable, notes payable, taxes payable, or I took some of my hard-earned money and invested it in the business. For a corporation, that could be evidenced by common stock and earnings that have been left in the business over time, or retained earnings. And for proprietorship, partnership, the name of the person, comma, capital. I hope this helps in your understanding of the fundamental accounting equation a little bit. I look forward to seeing you on the next video.